Hi guys, welcome to another video. This video follows on from the previous two videos where we sort of looked at penny stocks in general. In this video, as promised, we're going to look at a little method that I sort of developed over the years for picking penny stocks. This really is the meat of it all, and this really is where you can start taking some action. So just to recap on the previous videos, what we said is that obviously penny stocks are cheap stocks, and it offers a lot of potential. We can make some huge gains that we can't make with blue chip stocks, for instance. But the problem is that these penny stocks are very volatile, and often these are unstable companies that can just disappear overnight. So the fact is that there's a lot of crap penny stocks, and the key really is, if we are going to be successful with trading them, we got to eliminate as many of the crap ones as possible, and by doing that we can reduce the risk. So if you are trading high risk stocks, which is generally what penny stocks are considered to be, then reducing as much risk as possible is a very wise thing to do. So this 6-step process that I developed is designed to primarily weed out all the rubbish stocks and leave you with good quality stocks that's still cheap. It still has all the benefits of a penny stock, but it reduces that serious risk. So I think if you apply these 6 steps, you can massively increase your chances of success. So I'm gonna go through them quite quickly. I think a lot of these things are covered in some of the previous videos, so I'm not going to go into things that we did talk about previously. So I'm just going to go through these 6 steps, and I suggest that you take notes as we go along. The first step is we just want to start and have a look. We want to find randomly pick stocks, and what we want to do is, as we go through these 6 steps, we want to weed out some of these that don't meet the criteria. Now the first one is, obviously, we want to find a stock that is anywhere between, I would say, 10 cents and, I say $1.50, but you can go as high as $2. Often, some of the more expensive stocks are probably better picks, but you got to keep in mind that the higher you go, the less room there is for movement. So I think as a general guide, go anything between 10 cents and say $2. And this is just, you don't want to look too much at anything but price at this stage. I would say go and pick like 10 or 20 stocks just based on price, and then take that on to the next step. And in the next step, we want to find out if investors are even interested in this stock. If no one's trading it, then it's going to be a deadbeat. So I would suggest that you look at stocks with a daily volume of about 100,000. Now this is quite easy to see. If you look at the chart of a specific stock, just look at the volume. The volume would clearly say it would give you a daily volume. And I would say over a period of a week, look for anything in the 100,000 or above range. Now, just step 2 is already gonna cut quite a few out of your initial pick. And moving on to step 3, which is quite an important one, and this is going to cut a lot of the ones that you picked initially, is we want to look for stocks that have a positive earning. And the easiest way to tell that is to just look at the EPS of the stock. Once again, you can find that on the chart. We want to look at stocks that actually make money and not ones that lose money. You don't want to back a loser, and this is a big thing for a lot of rubbish penny stocks. So look at positive earnings, look at the EPS. If it's negative, just move on. Then step 4 is one that most people often miss out on, but you want to look at stocks that are in an uptrend. As I said in some of the earlier videos, we want to go with the flow. We don't want to run against the market. And with penny stocks, it's often not that easy to spot, but you want to look for positive trends. You can, there's many ways that you can look for positive trends, but look for recognizable patterns in the chart. And if it's obvious that the stock's busy going down, don't even bother, just move on. Then step 5 is you don't want to look at the stock in isolation. You got to, it's okay for if you're day trading, big stocks, but it's a lot more stable. It's probably more acceptable. But with penny stocks, you don't want to look at the chart just for a day. I would suggest you look at least at a 5-day period, because if you just take a snapshot of a good day or a good couple of days, you can easily be deceived by a one-hit wonder. So I would suggest at least 5 days. Ideally, look at the 2-week. Just look at the 2-week